Shane, what about the age-old debate of shares versus property, right? We hear about it often. What's your take?
Well, if you look at shares versus property over the very long term, they're similar. Like I've got data going back over the last 100 years, and shares return about 12% per annum. I'm including capital growth in the value of the shares plus the dividend, and property is fairly similar to that, about 12% per annum. This is Australian residential property. Now, this is pre-tax. So if you want to get finicky about it, you got to add the franking credit if shares, so that adds about 1.5%. And for property, you get into a debate about gearing because people tend to gear their property investments a lot more than they gear their share investments. If you allow for gearing in property, the fact that there's more debt associated with property, then it has higher returns than
Leverage.
shares. Well, it has more leverage associated with it, so it generates higher returns. When you look at the underlying capital growth and rents you get for a total return on average property, then they're similar to shares.